Hello, Oracles. Well, today we got the release of Tesla's 10Q. We also got their impact report. Lots to dive into there. The impact report is 231 pages long, so I'm not going to dive too far into that because it's just a lot. But I'm going to go over some key points and highlights that I saw in both the 10Q and the impact report, share those with you guys, and some information as to why we kind of saw the stock trading the way it was today, some news that had come out, some reports and some information from the 10Q that may have caused the stock to pull down. But we'll dive into all of that in just a minute. All right, so looking at the charts today, we were down 1.5%, closing at 162.55. Again, we are creeping down closer and closer to filling this gap down to 146.41. Again, I think this is the direction we're going. RSI is at 35. We just seem like we're going to be coming down to fill this gap. Now, looking at the RSI, looking at this gap, I have a feeling we're going to fill this gap before we go back up. Again, I don't know if we're going to end up maybe making a little pop here on some sympathy with end phase earnings, but either way, we are going to go back up at some point and fill the gaps above us. But I do think we are going to be filling this gap down to 146 relatively soon. Now, question is, are we going to come down and fill these lower gaps at 133, 122, and 114 as well? Based upon the RSI alone, and there's a lot of other factors that go into it, but based upon that, don't see us going down that low yet. This might be a situation where we come down, fill this gap, kind of bounce up a little bit, maybe a dead cat bounce situation, let the RSI settle, and we kind of find another balancing point. That's probably what's going to end up happening. I think we fill this gap, maybe kind of hold and consolidate around 150 for a little while. So we'll just monitor this. Again, FOMC meeting next week could change those things. But for right now, I think that's where we're going to be at in the very near term. So diving into the 10Q, there's a couple things I wanted to touch on here. One of the things that I had seen in an article today discussing why we had seen the stock price moving down was about the cash flows and the cash flow expenditures. Now, in here, they had discussed how their capital expenditures were expected to be between $7 and $9 billion in 2023, 24, and 25. Now, this was something that they had mentioned in the middle of 2022. Originally, back in 2022, it was 5 to 7 billion. Then it moved up to 7 to 9. So this is not new news to all of us. So it's just strange that they picked that out to be the reason why we saw a bit of a stock drawdown today. But either way, this is Tesla is building the future. It is a growth company. They need to spend the money. But in this report, they also state that they have more cash coming in than they can spend. So going to a $7 to $9 billion capital expenditure is perfectly fine because it's still within their budget. And as they had said here, overall, we expect our ability to be self-funding to continue as long as macroeconomic factors support current trends in our sales. And now, as Elon had mentioned on the earnings call, the fact that the interest rates continue to go up makes it harder for people to buy vehicles, so they need to come down on their prices. In doing so, they erode a bit of their margins, thereby eroding some of their profits. So we are expecting the FOMC meeting next week, potentially another 25 basis point hike. That could be another little zinger for us to bring the stock price down some more because of the direct correlation between those two. But after that, it's going to seem to be a pause. So maybe when it comes to those gaps, we've seen us draw down to the low 20s before when it comes to the RSI. Maybe because of the FOMC meeting, perhaps that does draw us down even further. And then maybe at the next one in the middle of June, where they give us the pause, perhaps at that point, it's where the stock starts to rebound and come back up again. And we start to see that nice gradual rise because the Fed has now paused and Tesla can kind of finally find some stability when it comes to their pricing. Those are just a couple of the different ways I see this potentially playing out. But these are just the things to pay attention to. But Tesla is giving us the information stating that they have plenty of cash flow coming in to pay all of their bills. They don't need to take on loans. So they are good to go unless anything major happens in the macro environment. And now a next big piece I wanted to point out had to do with energy. And it's something that some people had broken down. We've been discussing what gross margins are for energy, as before they were in the negative. And so they stated here gross margins for energy generation and storage improved from negative 11.7% to a positive 11% in the 3 months ended March 31st, 2023, as compared to the 3 months ended March 31st, 2022. This was driven by the growth in energy generation and storage revenue, and cost of energy generation and storage revenue is discussed above. Additionally, there was a higher proportion of energy storage sales, which operated at a higher gross margin within this segment. So we know that Megapacks have been sold out through 2024 and perhaps beyond that now as well. So looking at these Megapacks going out, looking at the power walls, this here is a massive segment that we have been talking about. Again, the revenues being generated from this are still minuscule compared to the EV revenues, but to see them now generating a profit coming out of energy and the fact that they're sold out as long as they are, plus you put on top of the fact that they've got Lathrop building up and they're going to be building up a Megapack factory over in Shanghai, that tells me that we are going to see two more giant factories producing profitable products in the very near future. So those do ramp a lot faster than EVs. So again, energy pushing strong. And I think energy is really going to start making a more significant impact in 2025 as both of those factories are completed and get to full ramp. Now, those are the two major things I wanted to point out from the 10Q. If any of you guys had noticed anything else in there, please mention it in the comments. I briefly went through everything, and these were the two big pieces that I had noticed in there. Another thing that I had seen in the news today was SOC Investment Group had come out and stated that they feel that people should not be voting for JB Straubel to be on the board of directors due to the fact that he has ties from them in the past. When they had Hiro Mizuno leaving, he was basically kind of an outsider being able to give, a different opinion. Bringing JB in kind of brings him back inside, and they don't have that, really diverse opinion from someone on the outside. So they have suggested and recommended that people vote against this. Now, I know many of you, and myself included, would love to see JB on the board. So you guys can let me know how you feel about that. And quite honestly, I would love to see him on there. I've already mentioned how I think he's going to be an integral part of the company going forward. He gets onto the board, potentially new CEO in a few years. Tesla ends up buying Redwood Materials. So I don't think that whole strategy, if he does not get on the board, is going to fall to the wayside. Even if JB doesn't come onto the board, Tesla can still buy Redwood Materials in the future, and JB can still come back over and be a part of Tesla again as well. So I think that we will get enough votes to get JB back onto the board, but having SOC Investment Group come out and state this kind of gives me a little bit of pause, wondering if maybe it's not going to happen after all. So now moving over to the impact report, again, there was a lot to digest in the 213 pages. I did not have a chance to go through all of it, but some of the key takeaways are basically stuff that Tesla had mentioned in the past about how every single new factory that they build is going to be producing a smaller carbon footprint every single time. They are building it better and more efficient. They're going to take up less space, use less water, and use less energy, and they're going to be putting the solar panels up on all of them to help make them be self-sustaining. So this is just the direction that Tesla is moving. So it's not just Tesla's coming out saying that they want to transition the world over to renewable energy with their words. They're doing it with their actions. Every single factory they build is going to be better than the last, is going to use less energy, and Tesla is already energy positive when it comes to their factories. They are producing more energy than they are utilizing, and that's massive when it comes to their whole entire goal of transitioning the world over to renewable energy. So again, when I hear a lot of other legacy automotive makers and other different manufacturers out there stating that these are the things that they want to do, show me. Actions speak louder than words. Tesla has been proving time and time again that their actions are exactly what their words are saying. And in some cases, their actions are louder than their words, and they're not saying as much. And so again, I didn't have a chance to go through all of it, but if you guys had a chance to go through the impact report, please share in the comments below any of the key takeaways that you got from this. But knowing that they've got Giga Mexico coming up, that's going to be the largest factory in the world, and it's going to have the smaller carbon footprint than the other factories that are out there, is just mind-boggling and shows that this can be done, and they're basically setting the stage for everyone else. So anyone else coming out here stating that they're really looking to be green, If they cannot produce a factory that's going to be as green as Tesla's, or at least not with a smaller carbon footprint than their previous factories, are they really making the effort or not? One last thing that I wanted to get into was a little discussion that people have been having over on Twitter, and I'm sure many of you have heard about this, is should Tesla advertise or not? And of course, we've discussed it on here a few times as well. Lots of different ideas about this. And one of the things that Sawyer Merritt had tweeted out was Tesla is basically advertising some of the things on social media. And, the majority of it is Twitter, obviously, because Elon owns it. But last year, they had over 1 billion views on their tweets last year. That's a lot. That's a lot of viewership coming in for just their tweets. So now we start to put that into other platforms. If Tesla can expand that out, I think that will really grow their advertising. Now, some of the arguments that people are saying for or against it are, lowering the prices so that more people can buy the vehicles. Obviously, the vehicles do sell themselves and they've grown significantly on just word of mouth advertising. The more vehicles they get out there, the more word of mouth advertising they are going to have. So, do they really need to spend money on advertising, or is it better for them to just lower the price of the vehicle and get more of them out there? Some of my thoughts on this are arguments that people have made that if Tesla advertised, maybe some people just don't know that Teslas are actually affordable. I work in retail and people come in all the time and they just have this assumption for what things should cost or should rent. And they've never actually done research to see what they truly do cost. And so I'll get reactions on both sides of the coin. Some people are like, oh my God, I didn't realize it was that expensive. And other people are like, oh, that's it. I thought it was going to be a lot more than that. So we could be having the same exact scenario when it comes to Teslas. People out there just making an assumption that, Teslas are super expensive and they can't afford it, when in reality, in some cases, you can get a Model 3 in the lower $30,000 range. Some people may just have that assumption that, all Teslas are at least $50,000. So maybe Tesla does advertise little things like that. Some other things that people have concerns about are, range anxiety. Not sure if, are they going to make it to the next charging station? What's going to happen with that? It's not the same as gas where I could just go get a tank of gas and go fill up my car and get out of that. So maybe advertising about some of these things to explain to people, hey, this is the actual reality and your assumptions are incorrect. So that to me is something that maybe isn't a bad idea for Tesla to get out there. Doing it on social media, I'm all about. I think mainstream media is dead. And I think that a lot of the people who do watch mainstream media, are of the older generations. Nothing against them because a lot of them are the ones that would have the money to be able to purchase a Tesla. So, maybe it's not a bad idea to throw a couple of things out there, but a lot of them are on social media as well. Whether he wants to advertise on Facebook or whatever like that, maybe it's not a terrible idea, but on the internet, there's a lot of different places that people go, searching internet, Google ads, so many different areas that people are going to be going and, doing it in a place where younger generations will also be. So I'm open to Tesla advertising just to kind of give that little bit of education to people who may be making the wrong assumptions about stuff. But realistically, in the long run, I think the more people who own Teslas, the more word of mouth advertising is going to be out there and the better it's going to end up being. Again, if Tesla threw $50 million into advertising, it's a drop in the bucket. They're not even going to notice that's gone. So maybe it is worth it for them to do that. You guys can share your comments down below. Let me know how you feel about the advertising thing. I'm kind of on the fence. I don't think they need to, but again, if they do it, I wouldn't be opposed to it. And I just think that there's some certain small things that might actually benefit them for them to get out there. Again, the big one is the safety of their vehicles. Anybody out there who's got kids, anybody out there who has kids that are just learning how to drive, safety of a vehicle is the number one thing. So if Tesla can at least say, hey, we've got the safest car on the road, and by the way, it's not as expensive as you think, those two pieces alone could be enough to kind of bump sales a little bit, in my opinion. So that's just my take on the advertising at the moment. Again, things can change. We will see how it goes over time, but I think it wouldn't be a terrible idea for them to do that. So overall, that's all I've got for you guys today. Again, stock moving down. I am not concerned in the long term. I am just looking at this opportunity to buy even more. I have been adding. If we hit that $150 level, I will increase my daily additions to $25. I will let you guys know as soon as that happens. But otherwise, you guys have yourselves a wonderful evening. Thank you for watching. Thank you for all of your support. Have a great one.